What's the other short, Dan? You said Apple. You're thinking about shorting 3. You're short Apple, and then you're only long 2. What's the other short?
It's Tesla, because we just think that with auto.
We have yet again another very important Tesla stock update. We have some news coming out in after hours of a downgrade. This one is quite significant, but this is actually good news heading into Tesla's earnings. That means there's a lot of room for an upsized surprise. Now, Tesla just did something that we've been waiting for a long time. Tesla has now just added wrap options for your Tesla Model 3 or Model Y. Starting prices on these are pretty high as well, about $7,500 for some of them. This could be a real revenue driver for Tesla. Now, most importantly, Tesla stock is up 0.36% here in overnight trading, but tomorrow morning we have very important economic data that will be coming out. I want to give you guys the estimates from Wall Street, what I expect and what I think could happen to the markets. We're going to talk about bonds. We're going to talk about this market situation we're in right now, because let's be honest, two things that are affecting our markets: interest rates, really yields on bonds, maybe is the best way to put it, as well as the Israeli war that's currently going on. Now, we're getting new developments that we're going to share here in this video that don't sound all too great. And I know just like every update just sounds worse than the last one in regards to this conflict. So we got a lot to get into. The work is cut out for us here in this video. If you guys are ready, hit the like button and subscribe to the channel. Now, I also don't want to leave this out. We are going to look at a clip or two from CNBC. One of these individuals is short on Tesla, and I want to talk about this because Tesla is by far the most shorted stock on the markets, about $22.5 billion worth of shorts. And I just think that is risky if you're a short, because odds are Tesla is going higher from here. And I think Wall Street as a whole is kind of looking at this the same way this individual is on CNBC, and they're missing the bigger picture. This could lead to a much larger rally, well into the $300 range. So let's go ahead and get into it. Hit the like button, subscribe to the channel, all of that. But first, we have fortune cookies. We actually have like 4 of these. So we're going to pick one out at random and see what our fortune is, you know? I had the chicken lo mein. So good. Let's see. Crack that sucker open. You will attend a party where strange customs prevail. Huh. Can you guys see that? I don't know if you guys can see that or not. That's a strange fortune. Maybe they are talking about the Cybertruck delivery event that I hope to attend. I don't know. Let's go ahead and get into it. So first things first, Tesla in overnight trading is only up now 0.28%, but you are continuing higher. You're right under your key level of 265. A break above 265 is going to have the shorts very panicked. Let's just call it that, because you're going to be bucking a multi-year downtrend and could turn into a much larger uptrend. We'll look at the charts as well here in this video, but I do want to start off with an update on this Israel situation. Now, I've said it before and I'll say it again. We're covering this closely here on the channel, because if this escalates and turns into a multi-front, multinational war, this could turn into a very bad situation quickly. Now, in regards to the markets only care if the situation is getting worse. If there is bad news that comes out, if the US gets involved, if Iran gets involved, if the other terrorist group in Lebanon, I don't know why I can't think of it right now, if they get involved, that's where the situation could turn into a 10-20% plus pullback for the markets. A lot of it has to do with oil. A lot of oil is starting to come out of Iran. 30% of the world's oil supply flows through the Strait of Iran. If they wanted to, if we get into a conflict with them, well, they could just shut that down, and just imagine what that would do to the economy. So there is actual monetary effects that could come out of this if the situation does get worse. But again, the markets can handle bad news. We can't handle uncertainty. So when we get a little bit more clarity, closer to like peace talks or something happening, well, that's when the markets will react. As long as we're kind of getting the same old, which we're getting right now, airstrikes back and forth, rockets being sent, the markets are not going to react negatively to that until we get new information. The markets are exceptionally good at getting over bad news, not so much on getting over the uncertainty. Now, this update says Israeli troops are on the move as the humanitarian crisis unfolds in Gaza. And it does go on to say that they are fighting right there around the border in a couple cities, Ashkelon. I don't really know how to say that. And a couple of the other cities right there. Now, within probably a day or two, you're probably going to start seeing Israeli troops making their way into the Gaza Strip. And that's where the situation has the chance to escalate much further from here. We heard from the White House today, and it actually sounded strong. Like the verbiage was strong, like we're really putting our foot down here, but against the backdrop of we really haven't done anything or haven't perceived strength around the world in quite a few years, well, it's all relative. But it does look like the U.S. is hunting for evidence of an Iranian role in the Hamas attack on Israel. Even as the U.S. believes Iran is, quote, complicit in the attack, given its years of support for the Palestinian militant group, National Security Advisor Jake Sullivan said on Tuesday that the administration still does not have direct evidence linking Tehran to the planning and execution of the assault. Tehran is the capital of Iran. Israeli intelligence is also going back and examining previous evidence, a senior Israeli official told CNBC. Quote, I doubt that Iran had no knowledge whatsoever, the official said. We've seen meetings and we've seen the close coordination between them. And remember, the funds, that $6 billion you guys probably keep hearing about, that was just unfroze on September 11th, 9/11, as a I don't know how much more coincidental you can get there. And now this happened. Again, my kind of thesis on it, just my opinion. I know you guys probably don't even care. But Hamas started a war they cannot win. And this is what makes me a little bit more concerned. Think about it pretty with common sense. The last time anyone started a war they could not win was Al-Qaeda. And look where that got them. Okay? So usually you don't start a war you can't win. It's like you don't pick a fight with someone that is going to beat you up. You just don't do that. So it's strange. It's very weird. I'll just leave it at that. I think this is more of a door opener into a larger conflict than it is Hamas trying to take over Israel. There was 0.000 chance that was ever going to happen. So I'm going to be watching the situation pretty closely. It does not look like right now we're getting any new information that will spook the markets coming tomorrow. Mainly, it's all going to be down to the economic data that will be giving us the move tomorrow morning. Tomorrow morning at 8:30 in the morning, you're going to get PPI month over month. Now, this is producer price index. Think of it as producer price inflation. CPI is consumer price index. Think of CPI as consumer price inflation. Now, PPI, producer price index, usually how these things work is if the producer, the company that is making the products, sees their prices go up and they're having inflationary pressures, usually they pass that cost on to consumers. So this can be one of those things where it can be kind of a leading indicator of what is to come. If PPI does go higher, that could mean CPI might go higher over the next, coming months. Now, for your PPI month over month, your headline, this is including same thing as CPI includes, your energy, your fuel. Last month, this came in at 0.7%. That is way above the Fed's target. That is like 8% inflation on an annualized basis. That was due to the spike in energy. This month, or this reading for September, you're expecting 0.3%. I don't think the headline here matters. I think it's all about the core. Core PPI month over month came in last month at 0.2%. So even though you did see that headline come in super high, Your core PPI still came in at 0.2. That is 2.4% annualized. That's great. That is perfect. That's just fine, okay? You're expecting 0.2% again. So if you come out at 0.2%, that's awesome. If you come in at 0.1%, that's even better. Now, on your year over year, you're actually expecting that to increase a little bit, but 2.3% on a year over year basis is not bad at all. Your core PPI year over year is last month came out at 2.2%. So a slight increase is what we are expecting. So we'll see what happens there. PPI excluding food, energy, and trade year over year expected at 3%, and PPI excluding food, energy, and trade month over month expected at 0.3%. So we'll see what happens with that. You do have Fed Waller that speaks at 10:15 a.m. So they're obviously going to be talking about these PPI numbers, whether they are good or bad. It's probably going to be amplified by whatever the Fed has to say about it. Now, you're going to get Fed Bostic as well at 12:15 p.m. coming tomorrow morning. So, well, afternoon, really, lunchtime. He did speak today as well. He had some favorable things to say. He said we might not need to raise rates again, given the rise in the long end of the curve with your 10, 20, 30-year bonds. And then at 1 p.m., you're going to have a 10-year note auction. Remember, I know you guys have probably heard this plenty of times now. The Treasury basically ran out of money in the TGA, the Treasury General Account. That's where you almost got the default of the U.S. government. That was back, I believe August, that dilemma was going on. Well, they ran that down to about $30 billion at the lowest point. Now they're filling that up. So they are issuing a massive amount of debt right now. Even the bond auctions that we've seen today, they raised those bond auctions on the short end. I believe it was a 2-year bond auction. We can check here. No, it was a 3-month bond auction, a 6-month bond auction, and a 3-year bond auction. They raised the amount that they were raising, so they were selling more bonds. So you're getting downside selling pressure on bonds, upside pressure on yields. So if they come out tomorrow and they say, hey, we're going to raise a lot more money on the 10-year auction today, well, that's not going to be great for bond yields. And that's, I would say, that the number one thing that is driving the markets right now. Number one being bond yields. Number two being this Israeli conflict. Obviously, the Israeli conflict is something that is a little bit more fluid. We kind of know what to expect when it comes down to yields. Now, at 2 p.m. tomorrow, you're going to get the FOMC minutes sharp at 2 p.m. The markets are going to move big. Don't be surprised if the markets move up or down 0.5% or more, potentially. But I would caution you, because I've been watching FOMC minutes now for over 5 years, as I've been an investor in this market, 5, 6, 7 years, something like that. 7 years? I'm almost 25. I started investing when I was like 17. So it's been a long time, okay? The FOMC minutes, it doesn't give you that much of a follow-through because it's prior information. We already had the Fed meeting. It's basically a transcript of what the Fed was saying, what they were doing, what they were talking about, why they did what they did. They already did it. So keep that in mind. Unless we get some crazy new information, markets usually get over the FOMC minutes very quickly. Not always, but probably 80% of the time the markets get over it, and you continue on whatever trend you were on that day. Whether you were bullish before the FOMC minutes, usually you'll see a drop and you'll continue to be bullish. If you're bearish on the day, well, you'll see a spike a lot of the times with FOMC minutes, and then you'll see that continued fall. So don't get faked out by that. Your big data report is going to be coming, let's see, from CPI. That is Thursday at 8:30 in the morning. Across the board, you're expecting inflation to come down. So the expectation is already a decline in inflation. I think that's probably true. I think there's odds are inflation might come in around the estimates or slightly under. That would be really good news. If headline PPI comes in at 0.2, If your core comes in at 0.1, if your year over year comes in at 2.2, well, that should send down bond yields, and that should be positive for the market. So tomorrow I'm actually pretty bullish. I don't think inflation is reaccelerating at this point. Let me know what you guys think down below in the comment section. Now, this is a chart from Earnings Whispers over on X. You guys can get this chart for yourselves. Save the picture. Pretty simple. Save the picture, add it to your computer or your phone or whatever, and keep it pulled up, right? Because earnings season is starting. It always starts with the banks. Now, the banks report earnings on Friday. I believe you have a couple banks. You have Delta, you have Domino's that report Thursday. But Friday is going to be the big day for banks. Friday's the day after CPI as well, which is on Thursday. So I think Friday could be a pretty big move. But tomorrow, all you have is Richardson Electronics, which that's not going to give the markets a move. But you are entering earnings season. Next week is going to be Tesla's earnings. I do expect the Cybertruck announcement some point between now and Tesla's earnings. So it could come out today, could come out tomorrow, could be Thursday, Friday, over the weekend, or at the very minimum by Wednesday. Or maybe I should say at the very latest by Wednesday. Now, in regards to Tesla and where we currently sit with Tesla, we're going to get into the Tesla stock news. I know we're covering that last here in this video. The sequence of events, the flow of this video, hopefully makes a lot of sense. What we're talking about now is very important when we get into some of the news that just came out and what could potentially happen next. Now, we are going to play the clip from CNBC. I'm just going to shorten it down to what you guys need to know. The thesis on essentially why this guy is short on Tesla. If you're a true Tesla investor, I was going to say bull, but if you're just an investor at all, you know that right now is not the time to be short on Tesla. Tesla is in the small minority of stocks that are well above their 50-day moving averages. I believe only 21% of stocks are currently even above their 50-day moving average. Tesla's been above this the whole entire time. Trust me, you don't want to be short on Tesla. If you're hedging Tesla, if you have a big position in Tesla, okay, maybe you could justify that, okay? But when you look at Tesla's, the amount of short interest Tesla has, you have $22.45 billion worth of short positions. This is some of the highest levels that you have seen in a very long time. The last time you were this high was when Tesla was around $300 right before earnings, and you were sitting at about $27 billion sold short, but you didn't get the Cybertruck delivery event. You didn't get a guidance raise. You did get better earnings than expectations, but there was just nothing exciting. Elon kind of bombed the earnings call too, if you remember. Tesla stock did not move like at all. It was basically flat after earnings, which was surprising for Tesla. And what happened? Elon got on the earnings call and he said we might have to cut prices more. So even after the parabolic rise you've seen before Tesla's earnings, around $300 is where we were at. I mean, following earnings, the stock really didn't fall. As you can see, this is a 30-minute chart of Tesla after earnings. Big wick down, big wick up, stayed sideways the 30 minutes following. Once you actually started the earnings call in after hours, that's where Tesla really started to get destroyed. So I think, again, if you're bullishly positioned in Tesla, the Cybertruck, that's going to offset potentially some negatives on earnings if we do get negatives. And I do think the markets are more conditioned to price cuts. We've seen the Model 3 and the Model Y just get a big round of price cuts, like $2,000 on the higher end, a little bit over that, $1,200, $1,300, $1,400 on the lower end for your lowest price Model 3 and Model Ys. And Tesla stock was actually green that day. So be cautious if you are shorting Tesla.
A few days ago, we bought a massive slug of stocks in the Russell 2000. Those stocks are flat year to date. We are long two of the Magnificent Seven, which is NVIDIA and Google. We like both of them. We think they can both do beat and raise quarters. We're short two of them, including Apple. And then the other three, we're, most likely not going to be involved or more likely to be on the short side. So for us, we think that the market is going to go up between now and the end of the year, most likely. Obviously the situation in Israel complicates this a lot, and we're managing the portfolio daily because of that. But I think looking at tech stocks, given the headwinds they have, you're asking for a lot between now and year end, because remember, the Magnificent Seven are up 96% on average year to date. The equal weighted S&P is flat. So I think it's going to be hard, especially with the valuations where they are for the overall market, which is above normal by, say, 10 to 15%. And for a lot of these names that are driving that overvaluation, to ask them to pull it much higher. And I think you're going to really have to pick stocks. You can't just buy a basket of all seven and expect them to work.
What's the other short, Dan? You said Apple. You're thinking about shorting 3. You're short Apple, and then you're only long 2. What's the other short?
It's Tesla, because we just think that with auto financing rates as high as they are, and with they've got a pretty high bar to clear going into Q4. At the same time, you've got consumer running out of money in terms of excess savings, and then you've got student loans restarting. We think there's a lot of headwinds in the stock. It's done great this year, and it's got pretty high valuation, and I don't like companies where numbers have got to go down.
See, I played that clip because it really highlights, I think, how broader investors are looking at Tesla. They're not looking at the things that we just mentioned. The fact that Tesla stock did not fall, it was actually green after Tesla cut the price of the Model 3 and the Model Y. If Elon says on the earnings call something he said similar to the last earnings call, is it really going to be that shocking of news that they might cut price again? Probably not. That's already baked into the stock. Estimates are 27% delivery growth, 29% EPS growth. You have the Cybertruck coming out. He didn't mention that. Most of Wall Street will not mention that. The $22.5 billion that are short in Tesla, they probably have no idea when the Cybertruck's coming out. They have no idea that it's probably going to come out between now and earnings. They probably have no realization of valuation as well. Sure, if you look at PE ratios, Tesla's trading at about 68. But if you look at the EPS growth and you attach the growth rate, divide the PE by the EPS growth rate of about 35%, you come to a PEG ratio that's like 2, less than 2. Whereas if you have a 30 times PE on a Microsoft with a 10% growth rate, you divide the two, you're at over a 3 PEG ratio. And it's uncertain Microsoft will even grow 10%. If you do the same calculation to an Apple, which call it 0% growth or 1% growth, just to get an actual number here, with a 30 times PE, divide that, you're looking at a colossally high, I don't even know if that's a word, astronomically high PEG ratio. So if you value Tesla based on growth, based on price, based on earnings, Tesla is actually cheaper than a Google or an Amazon even, or a Nvidia and Google, in which those were the two stocks that he was actually long for 2024. I don't think a lot of people are also taking into consideration the fact that Tesla is well off of its all-time highs. I get it. Shorting Apple, dude, I love that call. That's a great call. That's a rock-solid call. I would get behind that. Let me short it myself. I think that's a really good strategy for 2024. But shorting Tesla when it's still down about 40%, 38% from all-time highs, with the Cybertruck coming out with, the stock is conditioned for bad news here. You're sitting on a massive short position. Odds are the stock goes much higher from here. This makes me that much more bullish on Tesla, because if that's how Wall Street is looking at Tesla, they're going to be utterly disappointed when Tesla raises numbers for 2024, gives us the Cybertruck, says maybe they don't need to cut prices anymore, gives us an update on the upcoming Model 2 some point in maybe late next year, 2025, the energy storage business. Like, come on. This will make your brain hurt just thinking about how wrong Wall Street is. That makes me super bullish. Then you have banks like UBS, which just cut Tesla's price target from $266 from $290, maintaining a neutral rating. They're just lowering the bar for Tesla's earnings. This should make you even more bullish as a Tesla stock investor. Now, this is something that I think could be material for Tesla's earnings, something that a lot of people have said to Tesla they should do for a long time. Sawyer Merritt is reporting this as breaking news. Tesla is now offering factory color wraps in the US for Model Ys and Model 3s starting at $7,500. Now, I know some of you guys have wrapped your Teslas before. Let me know how much that actually cost down below in the comment section. But if you do this yourself or even have it done at a shop, I mean, what's the material cost? What's the labor cost for this? $2,000? Maybe? I would imagine. Maybe it's a little bit higher than that if you had it done in a shop. But if Tesla's doing it, they're getting the raw materials with their labor cost, probably $2,000 or less for some of these wraps. And the 6 colors that are now available is satin stealth black for $7,500, glacier blue for $8,000, satin rose gold for $8,000, slip gray for $7,500, forest green for $8,000, satin ceramic white for $8,000, and crimson red for another $8,000. This could actually be material for Tesla's business and for Tesla's earnings. So with all of this considered, again, Tesla, you want to see a breakout above 265. We did today. You ended at here in after hours, you are at $263.97. It looks like an extended trading Tesla stock is $264.30 per share, so you're just right under your 265 level. If you break out above that, get a close above that, that indicates potentially a lot more of a run to come, but the stock might wait until earnings or after earnings to give you that run. This chart looks exceptionally bullish. And good news is, I mean, if you do get downside after earnings, you're already at 265. You could fall back to 240. If the markets got really bad, again, you could fall to that 200-day moving average, which is right at about 210. That's where we just were recently. And if you're a Tesla bull, that's what you hope happens. I hope Tesla stock falls under 200. Hell, I hope it goes back to 100. Is it going to? Absolutely not. You would really need a calamity on your hands to get those prices. Anything like 180 and less and under, the markets are going to be in a really, really rough position. So, I don't know. Let me know what you guys think down below in the comment section. If you guys would like to come trade with us live in real time, I put out alerts every time I make trades. Link down below in the description of this video. We are hedging out our positions, hedging out our portfolios. We are going long in stocks. We're buying stocks for the long term. We're buying Tesla. We're buying a lot of other names as well. We're doing some YOLO, some earnings, some spreads, all kinds of stuff over there. Come get involved in the action. If it's not your place to be, well, you can just cancel and leave anyway. So what's the harm in trying it out? Come join the community. We will welcome you with open arms. Link down below in the description of this video. My name is Michael Tyler. That is going to do it for this video. Thank you for watching. Enjoy the rest of your night, and I will see you in the next one.